Hey guys, so in this video I'm going to show you how I traded this week. I think my first trade was on GBP Yes, according to my journal. So here's the setup over here. It's a Sandown setup. Price breaking through the highs to the left, broke through this high, and we're obviously bullish because we're reacting off this higher time frame demand zone that I also entered on the previous week. I entered this trade on the 30 minutes, but I ended up in a loss. So my stop loss and you can see what happened next. Push to the upside. So leveraging on the fact that we're already reacting off a higher time frame demand zone, I was more biased to looking for buys. So nice liquidity setup, liquidity supply and demand setup formed. So my entry confirmation and I entered. I targeted the highest, a nice 3.3 hour trade. Now let's move over to the trade that I'm not too proud of, and that is gold. This trade was very much avoidable, like so avoidable, and yet I took it. Like at first glance, you can probably see the problem with this trade setup. So this liquidity formed over here took out this high, but for it to make it A plus setup, an A plus setup, we need to take out the highs over here. But we failed to do that. Instead, we reacted off the supply zone here, gave rejections, and came down with such momentum, sweeping out poor liquidity. And I entered up this, entered up a bullish close, and say I immediately ended up in stop loss. And I shouldn't have taken it because I should only be sticking to A plus setups, and this more like a B plus setup, but I took it anyways and ended up in a loss. Third trade I took this week was another setup on gold. So it was an A plus setup, and this is this one over here. So after learning from my previous mistake, I waited for the liquidity to sweep out its own high before entering trades. So liquidity took out its own high, took out the external high over here, came down, swept the liquidity, and I entered on a bullish close. Targeted 3R, just about his before reversing. Perfect TPs. Let's move on to the next one, GBP GPY. This setup over here was probably aided by Jude unscheduled news events, and thankfully it ended up going in my favor. The concept is pretty much the same. We took out all the highs to the left, formed the valid low of liquidity, set the liquidity, and I ended on bullish close. Although I waited for a while to get a better entry, but my stop loss just beneath the deepest wick into the zone and targeted 3R. And the last trade was on GBP card. This was also an avoidable trade because it was the one candle liquidity, and one candle liquidities can never be A plus because we haven't formed a valid low to prove that investors are willing or liquidity sits underneath that low. So although we did have a fake out reaction over here, that was what convinced me to take the trade regardless. But in hindsight, I shouldn't have taken it because it was still a one candle liquidity. So we had this fake out reaction, prompted me that okay, people, supply and demand traders were getting in here, and really I entered, headed straight to stop loss. So I raised 0.5% of the account on that trade, but spreads. Really I clicked sell, I was risking 0.6% because I think there was an error with the size calculation, and I ended up losing 0.6% instead of 0.5%. Oh, and yeah, the GBP GPY win. The reason why you're seeing it as a 0.9% win over here is because I risked too little on this trade because I was already in the German index and gold trade at the same time. So for me to open a third one, I needed to scale down my risk in case all of them go and hit stop loss. So I scaled down my risk and only reached 0.3% to gain 0.9%. And let's talk about the trade I'm currently holding. I took this trade on the 30 minutes time frame, and it's looking very nice. A plus setup because we're reacting of a key level after a huge retracement over here. So we are generally in an uptrend price needed to retrace after breaking major highs over here. After breaking this major high over here, we needed to retrace and retrace all the way to the bottom. The reason why I started buying was because we were acting off a key level. So this was a resistance. You got the one tap over here, you have two tap, so third tap, fourth tap was the break of structure above this lower high. So and that solidified the fact that we are starting to turn from bearish to bullish momentum. So to break this high, I looked for the nearest liquidity supply and demand setup, and it formed over here. Tapped, gave an entry, and entered on the flip or the break of candle entry. That's why my entry is over here, and my take profit is at 10 RR. So because if I predict this trend reversal correctly, then we should have no problem hitting this 10 RR. So my take profit one is at this supply zone. That 1-5, I take off 50% of my position and let the remaining run to full TP. If I were to rate my trading this week, I would say it was pretty decent because overall I accumulated 7.3 R in total. And although all the losses I had accumulated was taking suboptimal setups, so it shows you the importance of always sticking to A+ trades and avoiding B or C setups. Don't take one candle liquidity, only take two candle liquidity or greater, and only take A+ setups. And no matter the outcome, you know that you have won because you followed your rules. So that's it, guys. I'm currently up on my account. See here, this is the German index trade I'm currently in. Well, I'm about 2-point-something% up from nearly blowing this. I think I was down. I had only $40 left to trade. So like 4,000. So it's 4,540. So just $40 till I blew the accounts until I had these two. Winning trades on gold and GBP JPY, and this loss on GBP card. So this German index final TP is $250, and yeah, let's hope it hits next week. Catch you guys in the next one. Peace.